joining me.
Q1 validated.
Still flip it around right here. I'm going to do this disclaimer real quick, and I'll be back in a minute.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as expressly by promise or guarantee that you will profit by losses made limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment in most Apple Trader, LLC, and any associated companies, agents, management, owners, and customers farmers without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made of any account is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record capability accounts for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses or material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may amount or overcompensate for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trading women's webinars are not intended to mirror my trades or to give specific trading recommendations. The analysis of the share trades and trades may take myself based on my personal analysis. The goal of the first teachers are to identify specific areas of trading and themselves ultimately decisions. Trading is extremely risky. You decide on personal trading, you sort your own risk, and potentially lose your entire account anymore. And that was profitable if we teach our my trading accounts. The spreadsheet that passes to is my personal spreadsheet that I use their own values and care values and help me to avoid exact prices for my trades. You can see when I enter their own prices into the master spreadsheet as well as prices that trades whether you want to go long or short. You have the ability to copy this spreadsheet and enter your own values and use mine to confirm some prices and grade and join some spreadsheet yourself. The spreadsheet is not telling you which direction trade is and has entry prices and stop prices for both long and short positions depending on the trading person inside trade. All right, good morning. Scrambling as usual. Some of you guys can hear me, see me. I'm not seeing the feed in the YouTube. Damn. So the link that I posted, I'm not saying video is unavailable. Damn, you can hear me. There's nothing on YouTube. Right, but the problem is I already shared this link. Hold on, guys.
Stock by NQ 166 contracts.
All right. So hopefully you guys can see my screen. No idea. A lot of technical stuff today. It's not. There we go. All right, I see it now on YouTube. All right, so open up the morning here, and as this was a bearish event, I did try a couple short trades here, and these were bark and lick trades where we had some sell stop runs right at the open here, and I had the pattern of the ATR retest confirm. Actually, right here. Got your ATR, your retest confirm. I did go short there, bark and lick, but I trailed my stop to the hot knife through butter exit. So I'm usually exiting up here on this instance. When it continues to tag the ATR 2 or more times and it can't go, you can trail your stop to there versus here. So I saved myself those points, and then I actually put on a hot knife through butter trade. So it's the same trade where it just keeps trying ATRs and can't go through. Hold on, let's see what the heck that was.
Prior ZM short retested. ZM short retested.
Okay, that was my overnight trade.
By CL 175 contracts.
Okay, so regardless, I'm long. You got stop run, or buy stops in NASDAQ. I'll take these trades accordingly. I am watching for a potential fail balance breakdown. This is one of the best trades in trading as far as position trading. Actually, it's still in this balance, so I take that back. So this is the current balance right here. It's just continues to balance. So the move out of this balance area will likely elicit a bigger move. and or if that attempt fails, then you'll still get the bigger move, right? So I was waiting for this to break down. It didn't quite break down, but say it tries and then can't, and then once it gets back to the high volume node, we have trades for that, so on and so forth. So it's still in this balance, so there's really nothing to do in that aspect. ES, same thing. It's just balancing in this balance area. We saw this. There was about 6-7 sell ice, 6,000-7,000 sell ice last night. Actually, it's easier to see. So last time we saw that, we got a huge move. Now we get some hero alerts as well. So last time we saw this type of activity, it was in my PM webinar back here, and thing got crushed, never returned from there. So we had the same type of activity yesterday. I'll mark those on the chart. That's this rectangle here. So it did break down, and I was short overnight, small. So I did catch this move, but point is it's still in this balance area. So I'm not saying anything. I have different strategies. So all I'm doing here when I'm going over these different trades is I'm looking for a volume event. So these trading strategies here, all they are looking for these stop iceberg volume events in important areas. So each one of these is an important area, and then we've added some new one recently. So we may be taking some reversion trades here. Reversion trades are just trades back to the volume event, which happens nonstop, right? So we'll keep an eye on these. What is brewing here is a potential A+ reversion, right? So when you have an event and then a prior event, when your entry, so this is the 1 ATR. I'm using a 5-minute ATR. That's what this is here. It's 50 again, by the way. I mean, the last few days, it's been out of control. It's been between 50 and 70 nonstop. But anyway, if this comes down here, if I get my entry in the prior event or before, as long as the stop is outside of it, I can take that reversion trade. So this is the closest thing to a scalp that I believe. Again, we're getting hero alerts, by the way, now too. And Brett from SpotGamma is jumping on here in an hour, less than an hour, and I got a lot of questions for him. He's only going to be on a half hour, so he's going to be thoroughly working, trying to answer my questions. Anyway, so this is one of my other questions. It's like this thing keeps firing off. I've been complaining about it every day, and then you see like one alert. So I'm not understanding why this keeps firing off. I have it on another screen, but let's see here. So the way the usual pattern is with this flow alert means there's heavy options activity coming in, right? So this is just one other thing that I look at. Very important. These options dealers are one entity in the markets, but they're a powerful entity because they have to hedge their futures. So somebody is loading them up with futures, and they have to hedge themselves. The flow alert happened down here. Again, I keep getting the flow alert, and I'm only seeing one like 5 minutes ago. So this is what I'm going to ask him about, why I keep. And I'm not even seeing anything on the equities here either. So this is why I want him on the webinar to ask him this. Anyway, the usual pattern is when you get a flow alert, whatever way it's trending, once it levels out, the market will turn. So we have a trade for that called floby. We'll go over that if that happens. This actually might be a floby, right? This is a floby. So I don't put these on very often, but I'm going to put this one on. First floby ever on the webinars. Anyway, I'll go over this trade in a second here. I didn't know my. I'm not going to sign to that right now because it's just a brand new trade. Again, we're adding trading strategies all the time. So what's a floby? A floby is a hair cutting machine that we named the strategy after. So these strategies are funny, memorable, but it's for a reason so you can remember them, right? So floby, take any trade after a SpotGamma hero flow alert when the corresponding SI event triggers the hero. So meaning this is moving higher, we got a flow alert, and with corresponding sell ice. So this is one of these auto entry trades where you can jump in right when you hear the event. It's not always simultaneous. We have other ones that you jump in, the sexy gexys right at the gex levels. This one could be like you hear the flow alert and then market moves a little higher and then you get the event, you can jump in. So anyway, I took this. Again, this is a brand new trade. Stop goes up here. The benefit of this is I'm jumping in the middle of the zone. So most of my trades, I'm waiting for the move out of the event, an ATR plus to get in. So if I was going to go short, then I still may go short this other position strategies. We'll look here in a second. But this one, you can just jump it right in the middle of the zone, so you can see the difference. I mean, it's like a 15-point difference of where I'm entering, right? So I'm using my traditional stop. This is the Scott Zones jar, by the way, and it's just drawing this information on the stop iceberg information on the sub chart here. So I'm in this trade short, 58.09 quarter is the stop for this. And I could put on actually more than I have on here. And you can hear that it's still firing off here. Yeah. So 09 quarter. You can see these prices over here too. We'll go over this. This is these are all these lines on the chart. Again, it looks very confusing. Once you understand what it is, it's very, very basic. 09 is the 09 quarter is the exit there. If I just get stopped out of this. All right, so that is working, Mr. Floby. Now we check our other areas, see if there's other area. Again, this is all I'm looking for is an event at an important area. This is one of my important areas. All right, we got something in occur too. One of my important areas, inflection zones where important things has happened, and this is also the high volume node of this balance area. So high volume node is just the middle of a balance area where most of the trade occurred, right? So that's right smack dab in the middle. So anyway, this is a sell ice event into an inflection zone. So if this fails out of here, I'm going to take this short. So these shorts are my traditional entries where I wait for the full ATR out of here, where I'm not just jumping in the zones, right? So there's a reason I don't get in all my trades right in the zones. It's not a very high probability trade where, you know, yeah, you don't risk as much, but it's you tend to get whipsawed nonstop. And again, this is all by trial and error for taking these things for the last 8 years, right? So I've determined I used to get in right when I would get here the event. I'd be like, oh, here, look at all this sell ice. There's big money selling here. I want to jump in with them. And, you know, they're not always right. And so the best way to determine is, yeah, you want to see the sell ice. That's the big money. They have a bigger effect on the market. They're right more than they're wrong. But I still want to see this market agree and push out more than an ATR. And that's just the magic number that I've seen. If it can show the strength to push out an ATR, that tells me this event is bearish, right? So I did put the floby on right in the middle of this, but that's a different strategy. So there's a lot of stuff going off and CL here. So if this comes out of here, I'm going to short the Izzy. Let's see if we got anything else here. And this data is delayed right now. It's supposed to be up and running today. I switched to data providers or brokers, and of course they never got it to me. So I'm not seeing anything as far as market profile composite. Let's see where we're at here. We're at 57.96-ish. So that's basically right here. So nothing. So again, a pick trade is just like the Izzy trade. It's just trading another important area that I look at, right? I'm looking for events either at the edges. You know, as it comes to the edge, I'll fade it, or if it gets in and comes to the edge and I get an event, I'll stay with it, type of thing. So there's nothing here, so we're not going to really go over that right now. And then the other areas I look for, lug levels, there's nothing as far as the major lugs. So these things are absolutely incredible. The second most powerful thing I've ever seen in my trading career as far as support resistance areas and targets. So say we ran into that and I got an event, I would take that, or into this one, take that. That we're in between here. So nothing to do there. So the only thing I got going here is an Izzy short. If this comes out of here, I will short that at 57.81. And this is all, this position sizing on the zone drawing tool is all contingent on these entries, right? So you plug in your risk, and I'll share this, my document with everything that I use here in a second. Just nonstop. I am watching 13 markets, so I can't really complain, but there's soybean stuff going on too. I'll try to head over there if this stuff's dead. And copper and not copper, hogs. You want to trade some lean hogs. You're in the right place. Anyway, if this moves out of here, I will short. All right, so now this is a sexy gexy. I'm going to take this one. I'm going to give this a second. If it blows right through it, I'm not taking it. So what's a sexy gexy? This is another auto entry trade. So these are using these options levels. You can see the sell ice coming in. It's basically at these two levels, but it's blowing through. It starts to fail again. I'm going to put this on too. So I already have the floby on. All right, I'm going to short this right now. Could have gone in a little better there, but I was waiting to see if that blew out of here. So I put my sexy gexies in my reversion trades on this, the Bookmap here for the trading firm. Still hasn't drawn, so give this a second here. There you go. All right, so more sell ice. So this is still in that NZ zone. So now I just put on sexy gexy. What's the sexy gexy? I got to remember them on the basic webinars here. I got to explain all these quickly. Sexy gexy. These are auto fade strategies, meaning I jump in right when the event goes off. So you already saw me put a floby on. I just laugh out loud every time I say that name. Floby, right? And now this is a sexy gexy. Take any fade trade into a SpotGamma or Method Q level. Trade is taken immediately when the opposing SI event fires off. So sell ice, or if this was sell ice going into it, which it was, or buy stops in that area. Be wary of the trade if the rel vol is elevated. I don't think it is. That's why I just jumped in there. But if it is, then I made a mistake. So again, I don't have my rel vol set up on Sierra right now. So we got to use this one. Come on. And of course, it's not going to work. Sierra's garbage as well. So if you guys want to let me know in the room if this is heavy relative volume, then I'll get out of this trade because I shouldn't put this on. If it is, if not, let's just open this back up and see. Again, I'm going to have my Sierra back up. That's what I use for the relative volume, but it's delayed right now, so I want to see real-time relative volume, right? Let's see. All right. So yeah, the relative volume is fine, right? So if you get over 200% or more, you don't want to be messing with these auto fade strategies or the options strategies like the floby or the reversion trades, things like that, because that means the big money's in here, and you will get your you know what handed to you. You'll get run over many times. So this just looks like normal volume. I put this trade on. So my stop for this guy is up here for the, just deciding if I'm going to put on one more. So what I was getting at is this position sizing is based on, so this is for the reversion trade or for the position trades. And this is taking into account. So for each one of these trades, I'm risking $500. So in the zone drawing tool, in the advanced, so I'll just show you this real quick here. Again, I'll share this with you in a second. You guys can get access, see where to get this stuff. Where's it at? For some reason I can't read today. Wait a minute, Nancy Scott Soames. There it is, right in front of my face. All right, so you come in here. This is the pro version. We have basic and pro. Basic just gives you the ATR and the entry and the exit, the entry and the stop prices. The pro gives you all these reversions, which we'll go over, and you can put in. It gives you your position sizing too. So I put in 5,000. I'm risking these are all on. Well, this one's not on an Apex account. This is actually on the trading firm. But you know, if you're trading your live account, you shouldn't be risking more than 2% on a trade, on an individual trade. So this is basing it on risking $500 on you know, whatever for my risk. So meaning for the position trade. So if I put on this Izzy, if this does fail out of here, that's my entry, and that's as many as I can put on if I get in here and I stop out here. And I know, you know, again, traders that most of them that don't even know what they're talking about are like, well, that just erodes your risk. Are you kidding me? I got to risk 30 points on this trade. Well, first of all, the ATR is 11, so that's not that big of a deal. But the best way that I determine, I've watched, you know, millions of these things, it feels like over the last 8 years, the best way to avoid Algo City, meaning that's all that's in here 90% of the time, it's just Algo's whipsawing everyone, is I'll force it to get the ATR out to enter, and then I force it to move all the way back, the ATR through the event, and another ATR out to prove me wrong, right? So in this one, this is the auto fade strategy. There's more sell ice here, by the way. So again, guys, this is a good example so far of, yeah, you know, paper is selling in here, but they're not doing real well. Why did this not draw? This is this one here, right? So you have 3 different batches of sell ice here, 1,200, another 1,500, another 500, another 1,200, right? So somebody continues to sell this, and the market, it keeps going up. So, you know, paper, big money is right more often than wrong, because trust me, if they just keep putting sell ice in here for the next hour, the market will relent, right? But right now, it's not working out for them real well, right? And again, you're never going to know. And that's the other thing I get. Like, you don't know what they're doing. Are they hedging their future, hedging their options? Are they getting out of longs? I don't care what they're doing. I know these areas respond to this activity, and we have patterns for that response. That's all we're doing, right? It does behoove you to know where this is happening. I showed this a little bit ago, right? Last night, or at the close yesterday, the same pattern came in, and look what it did, right? So this was all the sell ice at the end of the day yesterday, and the thing gapped down 80 points, right? So if this doesn't hold, then we trade them accordingly. And it's called, I have 6 distinct setups that I go over in my trading course that are the core of my trading. So remember I said I'm looking for these volume events in important areas, aka strategies. Well, I have specific names for these volume events. So if this stuff holds right now, it's called a Titanic. It's very technical stuff too. Not. So Titanic is like running into an iceberg. The market is running into hidden orders in the order book that are triggered once they're traded into. So again, an iceberg is a hidden order. They only have to display a certain percentage of their contract size that they want to sell in this instance. And then once it's traded into, so they say they have like, so this last one was like 1,500, right? All they got to show in the order book is 150. And then once it gets traded into, the rest of it populates, right? So the reason they do that is because if they drop a 50, look at the size in this order book. What do you think is going to happen if someone just puts in a 1,500 in this order book? These algos will run a thing away from it, trying to make them chase their order. So that's why they use icebergs. But with this data, the MBO data, we can see this information, right? It's very important. So again, I say all the time, you may not have this information or not be using it and making money trading. Great. I will promise you, if you understand this stuff and know where it's happening, your trading is going to be that much better, like probably 10 times better, right? If you're not using this, you just don't have all the information. Yeah, you might get lucky on a short order because this is a Bollinger Band or whatever you're shorting. But don't you think you want to know there's probably 6,000, 7,000 icebergs in this area and sell icebergs that somebody's really selling it heavy up here? I do. So that's the point. Like, this just is information that you need. All right, I got to figure out where I'm going to get out of this. So this was the this exit for this sexy gexy was supposed to be down here, so that's where it's going to stay. We'll go over that exit. I'm supposed to have multiple contracts on here, but I still have the floby on, and I have the sexy gexy, and I'm going to put on an Izzy short here if this moves out now. And then this is the new entry, 57.91, and I can put on 4, and it's there right now. This is also A plus. This tags here. I'm also going to take a reversion trade here. This is what I'm going to do here. If this tag, so again, these are different strategies. If this tags, this starts coming back, I'm going to put on there. I'm going to get out of this because I'm doing this all on one screen here. Didn't quite get there yet. Let's give this a second. All right, that's good enough. All right, so if this comes back, I'm going to get out of this sexy gexy. I forgot I had ink. And then I'm going to take the reversion trade back to this event. The other thing, though, is what I should be doing probably here is making this all one event. All right, doesn't matter now. I got it. So I'm trading this as an individual event. What I should be doing here, and I'm probably going to get burned for not doing it, is make this one big zone, right? Because you had them. I mean, they weren't right on top of each other, but this is likely one house. So what I should do here is just make this one whopper zone, right? I don't think you get, this was 10 minutes ago, so I'm going to combine these two, so I should actually be out of this trade. So I'm going to give this a second here, see if it can pop up for me. Right, I'm just going to get out of this. What did I just do there? So I took the sexy gexy off of this thing, and then more sell eyes came in. So say this was independent by itself, right? The back in black trades, again, another strategy. I will trade once it tags an important area. In this case, you saw 2 gex levels, and these dealers reacted, and you take the corresponding ATRs. This is the one ATR coming back to the zone, and that's what these values are, right? So long entry, can't even see it. Oh yeah, here it is right here. So that's what I just did there. What I'm saying is I should have made this one zone, which I'm going to do right now, and I would have never put that on, not yet anyway. So because this is where you get subjective, right? Like, combining these zones, you got to make decisions sometimes. Most of the stuff we do is very straightforward, black and white. Get these orders out of the order book before I forget. But there's times you got to make decisions like, okay, this is very likely one entity, right? Sell ice, sell ice, sell ice, combine them, right? So you got the zone's pretty wide, but it's not that wide for this ATR. So I'm fine with it. Now going forward, I can take the back and blacks off of this too, and I wouldn't have a problem with that because I combine the zone. So you may be confused. If you're new in here, you'll get it. It's very simple. You guys, you can't be texting me in the room unless it's something really important. I can't be going over the stuff. Can you please check me what traded BI short and last stop? Guys, just ask me later. Like I can't do it right now. My trade room, please. I mean, unless it's something pressing. And I had the, no, I wouldn't have taken the back and black haircut through this area. I think that's your question. So what he's asking is, would I have taken the back and black? It did tag the one ATR, just threw it and it came back to the zone. So this is what I'm talking about, guys. Like, look at this. This is this exact tick back to the zone. We use 10% of an ATR in front of it to get it. But it's like, it's unbelievable, literally unbelievable how many times a day this happens across all markets. That's why we call it the reversion trade. So this trade was born because, remember we were talking about the bark and lick earlier where I was waiting for the ATR retest confirm. Well, every time I would take that trade, if you watch any of my webinars the last 7 years with Bookmap, I would always say, all right, I'm going to put this long on, but I'm going to wait for that retest. That retest happens at least 70 to 80% of the time. And then we were going over trading in the zone, and he's got a exercise in there about coming up with like new trading strategies and how you do it. You just come up with your rules, so on and so forth. And I said, well, you know what? If I'm saying this thing comes back to the zone 70, 80% of the time, why am I not taking advantage of that trade back to the zone? And then I can take other trades when it does that. So that's where the reversion trade was born, right? So these markets have a ridiculous propensity at the 1 ATR, the 2 ATR, or the 3 ATR, and that's that dotted line there. That's over here. You can see the prices here too. Right, there's other stuff firing off. I can't get to it right now, guys. Not equities, but like soybeans and crude. I want to see what happened in crude here in a second. But so these are that's the 1 short, the 2 short, the 3 short. That's the stuff on the chart, right? So let me get this in the YouTube too before I continue because I'll forget. I got to remember Brett's coming on here too. So this is the document. This is everything I'm using. The first thing on here is the zone drawing tool. You can draw these things by hand, and we have a spreadsheet for it where you can enter the zones. You get access to that as remember my trade room as well. But it saves you years off of your life drawing these manually. If you guys have watched my prior webinars, it was not fun. So put this in here. So that's everything that I use. Any questions that you have, please put them in the YouTube. I don't see the Discord. So put them in the YouTube channel. All right. Actually, I should be going long this right now, bark and lick. I don't really want to, but hate being long. So what am I talking about? So the bark and lick trade are looking for this pattern that I was just talking about, the ATR, the retest, the confirm, and you take the long. I didn't get in there just because I wasn't over here, but if this comes back to this entry point, I'm going to take NASDAQ longs, right? So I was short ES. I still am short the floby. There we got nat gas stuff firing off too. The number just came out. I can't get over there either. So I'm going to put on this bark and lick if this comes back here. Bark and lick long. So a bark and a lick are the same trade. With the lick, you're just trading to the heavy liquidity, right? So you can see this, meaning I'm not getting out in any other area until it gets to the heavy liquidity. So say it comes back, I'll put on the bark and the lick. The lick, I'll watch this area. If it can't get through, I'll get out of it. If not, I'll hold to this liquidity here. So it's just more of a target. So a bark is just looking for a further away target. So that entry, you can see here, long aggressive, 2460. See it down here on the right. We're going to put this in. This thing is whipping around. So bark, lick. Now I can put on this 0.2, risking the $500 on a trade with this entry here and my stop down here, right? So I'm about to get filled on that here. Turn this up. All right. So I'm going to go long that, unfortunately. And then for this last event in ES, I still don't know what I'm doing, meaning I did take the floby off of this guy. We took the sexy gexy off when it happened and got out of it. It took the reversion trade that wasn't even a reversion trade at the time. But the point is, as far as position trading, I don't know what this is yet. I don't know what I'm going to do with this yet. How do I determine when it can push the ATR? That's the blue line right there. That's how I determine whether this is a bullish event or a bearish event, right? So if this fails out of here, again, I'm going to take, this is sell ice. It's just been sitting in here since the webinar, basically. But this is in this inflection zone. Oh, wait, we went through there. Hold on, this is a 30-minute. I'm using the, switching back to an hourly. So the hourly, this is the one I posted in my trade room today. So I will take this one. This is the high volume node of this too. So I'm okay with that. This is where he had buying tail, and directional conviction yesterday. Again, I draw these zones based on the 4 important areas of charting, just quickly, tops and bottoms of balance areas. That's that zone. That's that zone. High volume nodes of balance areas. That's that zone. Something else happened here, but that's that zone. And then buying and selling tails. And most of the stuff overlaps, right? So there's a buying tail that led to that move. Here's a selling tail that led to that move. And then directional conviction. So this was all in one. You had the top of the balance area, you had a selling tail, you had directional conviction. You'd be amazed, just like yesterday, how these markets react when they come back there. And this one came back there, and we had sell ice, and I took that trade overnight, actually. So anyway, this is an Izzy zone. So if this fails out of here, I'm going to take the Izzy short. I still haven't put that in. That entry now, because remember I had to combine those zones. That entry is at 57.84 quarter, and I can put on a whopping 0.3. So again, this is my risk level to risk $500 entering here and getting out here, because that's how I do it. I can only put on 0.3. All right, let's get this in here. What did I say it was? 57.84. You gotta be adjusting this, because this is adjusting with the ATR. You adjust till you get filled. Let's see how it just changed. Now it's 57.83.75. All right, that is working. Other than that, if this turns out to be a bullish event, and this is actually a variation here, right? Because I didn't combine these two, but say this event turned bullish. That's that. Tag that. It hasn't yet. Retest confirm. I can take barks and licks off of that guy long, kind of like I'm about to do in NASDAQ. And if this guy confirms, I can take bark and lick off of that. My filter for those bark and licks are Algo guy. So what's Algo guy? It's just an exponential moving average ribbon. What's funny is the guy with this is not bullish yet, but it's starting to pull right now. The trader that introduced me to this, I did a mentoring session with him like 6 years ago, and he used this to trade. The way he would trade it is he would wait for the market to move into the red ribbon. So this is just, these are different time periods, for longer time periods, exponential time periods, moving average time periods. The red is the longer term, the blue is the shorter term. So when the red's above the blue, it's bearish. When the blue's above the red, when the blue's below the red, it's bearish. When it's above the red, it's bullish. So before I get into that story, so for my bark and licks, I demand this to be in the same direction, right? It's just a filter for the bark and licks, because the bark and licks, remember I said I put these trades on waiting for these events in important areas. Well, the bark and lick, it can happen anywhere, because the edge is inherent in this event anyway, right, by itself. It doesn't even have to be an important area. So that's what the bark and lick is. So it doesn't have to be anywhere, as long as it does the pattern ATR retest confirm, but I need Algo guy in the direction is what I'm getting at. So what's funny is the guy who I learned this from. So I'm always open as a trader. You've always got to be open to new things, to evolving, right? Doesn't mean you just start throwing trades on it and every indicator that you see. But, when I'm introduced to something, like I was introduced to this through a trader. I was introduced to the Ludwig levels by a trader that I was mentoring, right? And when I watch something for months and I see it continuously work, then I'm like, okay, I want to implement this. The beauty of any of this stuff is anything that I use, I demand a volume event in that area to trade. And that's what I'm telling you guys. So I don't care. It's not for me to tell you what is important in your trading as far as areas. You can be using Bollinger Bands. You can be using Fibonacci, whatever you're using. That's not for me to say whether it's important or not. What I'm telling you is demand a volume event in that area, and you enhance your hedge times about 100. So anyway, the guy that I was mentoring, who showed me this, that I started watching and using, he actually joined my trade room yesterday after 6 years. I don't know what he's been doing for 6 years, but he's in there now. So his name's Anthony. He's actually has. When did I get filled up? Oh, that was the. So I just filled on the Bark and Lick Long NASDAQ. Filled on that. You can get the fill some. And he actually came in yesterday. You can see this is pretty funny. He's got an enhanced version of his Algo guy, which we're going to get him to do a webinar for us. This right here. So I said, what is that? Is this a Algo guy on steroids right here? So this is his new version of it. So he looks like he's got 85 of the short term. I don't know. He's going to do a webinar. He's new to the room, but he's where I learned Algo guy from. So I got to give him his props. All right, so this is I'm going to watch this area. If this struggles, I'm going to get out of some of that lick and some of my bark. I mean, it's not a huge trade, but it's 40 points in my favor. I'm going to give this a second. Actually, I want to get tick strike going here too. They got a new version of that. But I'm watching this closely. If this can't get through, I'm going to get out of a couple of these. I'll get out of. I've got to find the damn thing. Come on, you can do it. See, this is how you can judge too. This is tick strike. This is how they got a new version. It's kind of a pain until you learn it. See how this is going crazy? See how it blew right through there? So I can hold on now. I was about to get out of some. Like, why do I want to sell if no one else is selling? See what I'm saying? So say this thing came up here and this was dead quiet. Well, then I would get out of some. So it blew right through the put support there. So I'm going to hold this. If it starts to fail back through, I'll probably still get out of one. See how it's getting quiet, but let's see if this can keep rolling. Let's see what ES looks like. The only thing I should be out of this floby here. Floby didn't work out so well. First time I put it on the webinars. What was that? Oh yeah, I stepped out of that. So the floby didn't work. Sorry, it's a good college try. So a great example. How's this paper doing? How's this big money selling doing today? Not very well. Great. I took one trade based on this, but now there's your ATR. We get ATR retest confirm. I'm taking Bark and Lick longs off of this. Because Algo guys should be bullish now. So I'm fine. Fine taking that and off a broken ice event. So this is one of my 6 distinct setups in my course that I go over. You can get the course on my website or the Bookmap Marketplace. This is actually, so what I'm going to watch for here too is a reversion trade. Say this pops up to this GEX2, which is the second largest GEX level on the board, gamma level, and it fails. Then I'll take the one ATR coming back to the zone called the back and black trade. So you see, I got all these different strategies, and I'm watching. It's probably hard. I know it's hard to follow, and it seems very complicated. It's not. Once you understand what I'm doing, it's not complicated. And what I tell traders that come to my trade room is, pick a couple of each strategy and focus on those. And as you get better, then you can add things, right? So here's the position trading strategies. Remember, I was going to take the Izzy short. Well, that's off the table now because this is already confirmed as a bullish event. This guy. I did take the Bark and Lick. Right? Blind ATR retest current. Blind just means it could be in any area. Lick is a Bark going for the heavier liquidity. And then we got the auto fade strategies. We already put on a sexy gexy today. That worked quickly. And then put on the floby. That didn't work. And then the reversion trade. So this is what I'm talking about, the back and black. So point is, don't come in here and think you're going to be able to employ 20 different strategies. Pick a couple, get really good at them, and then add them as you get better, right? Hold on, let me keep an eye on this NASDAQ because it's getting quiet here. See how it's filling back through here? I'm going to get out of one. So I gave it a chance to bust through there, right? No go. Still long. So this is what I do, guys. I pay myself. This is straight out of the Trading in the Zone. I've copied it and added my own stuff. You get this as part of my trade room too. I pay myself as the market makes money available to me. Ludwig levels, market profile composites, highs, lows, POC. So all of these SpotGamma levels, Method Q level. That was a Method Q level that is starting to fail. I tried to get through there. It's failing. I got out of one. I don't get out of my full position, but I will piece out, right? So that's how I trade. And then I try to hold one contract for the bigger move, meaning bigger move for me is going for the major lug, right? Ludwig level. That's all this stuff. So meaning I will hold this now. That's why I only have one contract left. I'm going to hold it since I did get out of one at that mentor Q level. I will hold it for a red lug and or an opposing volume event. So say this thing starts ripping higher and I get an event that turns bearish, then that's how I trail my stop. That's how I'll get out of the trade. So if this comes all the way back, I will stop out here at 326.50 and I took one off, so I'm fine with it. If it keeps rolling, I'm fine with it too because I took one off, but I still have one on, right? Definitely want to watch these puppies up here. So in this case, I would not remember we were talking about the back and black off Gex2 and the ES, which I still may take. These I would not take because I'm looking for the retest of the zone. It's already retested the zone. I'm looking for the first retest. That's already happened. So say it did tag these, started coming back, I wouldn't take that back in black. That's me personally. If you want to take them, go ahead. Sometimes it does come back, many times, but I'm looking for the first retest. It's already done that. So that is a no-go on that one. This one is still alive, right? So meaning it's got the ATR out of here. As long as this doesn't come back right now, say this ripped up higher and bounced off Gex2, I would take that back in black. Or if it ripped through there and came back off that, I'd take that back in black. If it comes back right now, then these are off the table because it's already retested the zone. So again, this is the back in black reversion trade that I'm referring to. And then if this does come back, retest confirm, then I'm put on bark and lick longs in ES like I did in NQ. I'm really trying to push this thing through this level. You got questions? Throw them in the. I like the Joey Zaza. Is that your last name? Movie. I haven't done any movie quotes lately. Joseph's my middle name too. So now you're the teacher's pet for the day, Joey. All right. Again, you got questions? Throw them in the Bookmap Ltd. Or the the YouTube chat. Let's see what I missed a bunch of stuff here because I was going over a lot of basic stuff. But so guys, that's the other thing too. You think I'm going fast in here on my live webinars for my trade room? I go even faster because I'm jumping between 13 products sometimes. I mean, not that many, but at least 5 or 6, right? So I understand I talk fast. I understand I'm. It's like drinking from a fire hose, but that's why I have 5 years, almost 5 years now of webinar replays. So when you come in my room, you get access to this. You get them going all the way back to 2020. So you can pick out any day, stop it, pause it, and then you can also do another incredible thing with Bookmap. You can replay the days with the data feeds. You also get access to my data feeds. All right. So if you come in here, you get access to this. The data feeds save on your computer too, but I have them for all the products. So if you want to watch a certain product, right, so then you come over here and Bookmap daily data feeds. So you got data feeds for 5 years too. So you can pull up the day, replay the day, watch the webinar. And the great thing about the zone drawing tool as well, it will draw the zones on the replay. So that's that, you play the day and trade it like you're trading live and practice, not a game, practice, as Allen Iverson would say, right? Because this is how you get better. You can't just jump in here. I mean, you want to learn live too, but you want to practice this stuff. And then, then when the stuff's hitting the fan, you're ready to go because you practice it, right? Like practice these entries and exits and what you see. And like, again, you guys are going against the brightest minds on the planet. I missed an A+ reversion here, by the way, and I'll go over that here in a second. You're going against the brightest minds on the planet. If you think you're just going to pull up a chart and a dome, depth of market, and start clicking and make money, yeah, you might get lucky a couple times. You're done. You got no chance. Trust me. So you need to practice. That's the best way to practice. Not a game. Practice. Anyway, I missed the A+ reversion here. Well, it technically was not, but this is the gist of it because it's supposed to be event. There was already another one here, but just say that wasn't there, right? This is one of the best reversion trades. That's why it's called A+, because we already know the propensity for the market to come back to the zone. I can probably show you 20 from today alone, right? Literally, we'll go over some of these markets. Your mind will be blown for this trade. It's a scalp trade too. So So many traders love to scalp because they can't stand sitting in the whipsaw, sitting in position trades for hours. So this is the best scalp that I've seen as far as the reversion trade. Anyway, your one ATR entry would have been there. Now you have the benefit of trap traders in this prior event. As long as your stop is through it, that's A+. So we already know the market's probably going to come back 80%, 70, 80% of the time to the zone anyway. Now you got trap traders that are holding their breath when it comes back here that got run over. Please let me out. That helps propel it back to the zone too. That's why it's called A+. So anyway, I didn't take that. We'll come back here. It's kind of doing nothing. That was crude. Here, let's just look. Let's look at some of these. I guarantee I find at least 10 to 15. Here's one right here. There's natural gas. We'll just go from product to product. Natural gas, ATR, retest. Well, who knew? I did. Gold. Let's see what gold looks like here. ES is trying. We already saw an NQ retested, right? And see how I was struggling with this put support. That's why I got on one, but that retested. So that's already 3. This is probably going to come back. That's going to be 4. Let's just hop between these markets. Let's see. Let's just see. This one hasn't retested there. There's a bunch of sell ice here. I don't feel like combining those right now. That was wheat. Nothing in soybeans as far as events. Nothing in Dow yet. Guys, I watch all these markets because I feel like I'm just letting opportunity slide away because it's all the same stuff. When you're looking for volume events in these important areas, it doesn't matter as long as you know the threshold of the market, right? So what I would have done here, this is a great example of combining the zones, right? So if this is wheat, you get event, or sell ice. These aren't all threshold, but you can see this is very likely one house. So just make this one zone. That's the beauty of the zone drawing tool too. You can adjust it. All right, let's just X out of that. That's not important because it's in the same area. That's not important. It's in the same area. This is 2, but this is the most recent one. So that's how I would do that, right? So this hasn't retested yet. It wouldn't surprise me one bit. I wouldn't take the back in black here because it kind of already got through there. But say to tag the gexy and come back, again, you're just using another reason for the reversion. It does the reversion anyway, 78% of the time. Now when you're seeing daily reaction, that just helps it get back to the zone. That's the trade, reversion trade. Reversion back in black in that case. Let's see here. There you go. This is the 1 and the 2. This is soy meal. Doesn't matter what market. Here's the 1. Here's the 2. That was the stop for the 1. You never got stopped out. The 2, the 1, back to the zone. Soy meal. Stop me if you've seen this before. Oh wait, yeah, you have. Another one. So we've already shown about 8 already. Here we go. ATR retest, back to the zone. Soy meal. How many people are trading soy meal? Not many. You should be. You should be looking at all these markets. As many as your bandwidth will allow you to handle, you should be watching because it's just opportunity after opportunity after opportunity. This one, let's see. This one worked. So the 1 ATR I have in front of the 1 ATR reversion entry, that's that dotted line, I have in front of the ATR because these algos will snap it back right there. You get filled. It actually did take the right back to the zone. What's that, 9? So you guys get the gist, right? So for you scalpers out there, which is 99% of traders because they can't just sit in position trades, that's the best way to scalp. Hey, well, look at this. That retested the zone. I haven't seen that one. Number 10. So now this is the pattern I was looking at. I didn't take this reversion. You can take them aggressively, meaning you just jump in when it tags it. They're not as I like the back in black or something else is confirming the move back to the zone. So I didn't take that. If it comes back, I will put that on. And I'm still in this NASDAQ longs. Guys, this is why I get out of some of my position at these areas, right? I got out of one here. This is exactly where this failed. Put support back there. So I'm still in one. But I pay myself as the market makes money available to me. All right, completely dead now. Let's check out crude here since nothing's going on. So you had sell ice, then you had buy ice right after that, and this did retest. Like I said, let's see what Algo guy looks like. Algo guy is bearish. So this is a great example. I would not take bark and lick. Oh, why did this just... Hold on, let me restart this. This is a new version of tick strike. Restart this. This is just a flash. Usually when it flashes, it doesn't stop picking stuff up. Anyway, so we've been talking about bark and lick, right? Well, yeah, here's your ATR, here's your retest. If this came back out, would I take this long? No, because Algo is not my direction. Can I take shorts off of this? No, because it already proved as a bullish event for me. So if it proves as meaning got the ATR out of here, right? So if it does that, then any shorts I get off of this particular event are DQ'd, disqualified. So nothing for me to do off of this event. Crude. Natural gas is all over the place today because of the number. So if you want to trade this market is one of the biggest algo markets on the planet, right? The more a market looks like a Christmas tree, see this liquidity that's lit up, putting in and pulling, putting in and pulling. That's these guys whipsawing traders to death, the algos, right? You can see all this liquidity. I wonder where this market's headed today. So say this market ripped up here. It doesn't mean it's going to take it right now either. It doesn't mean you just jump in a short because of this. But say this came up here and I got an event and Algo guy was bearish. I did the ATR retest confirm. I would put on my lick trade and that's my target. And you will be amazed at how often these markets come to that liquidity. You can literally come up with a thesis on the day. Some days you'll see like liquidity. I'm talking longer term, right? This is long enough. Well, that means possibly range day. There'll be other days where you look at the liquidity, you'll just see not like black hole below, and you'll see liquidity. Well, that's telling you, remember, these are like magnets. It's not the opposite. It's not, oh, look at all the, like this right here. It's not, oh, look at all those buyers here in the order book. That's all this is showing, by the way. It's just showing the order book on a heat map. Look at all these buyers. I want to get long. No, it's actually the opposite. These guys will get their fill. And once they get their fill, it'll probably go up, but they want to get filled. They're going to get filled, right? This is the game that I used to play. That's why I know what's going on. I used to put my orders in the mini S&P order book, and back then it was 1,000 lots, and there was 1,000 lots all up and down the order book. Not anymore, because now it's all algos, right? But I would play this game where I'd load up the order book, and then I would start selling. I test the waters, right? I could put on up to 3,000 contracts. But say I'd put on 2,000 down here, and I'd sell a little bit and see if the market reacts. Say it would just swipe down. I'm like, that's interesting. I'd sell another 50, another 100. And the market just kept responding. And then when I got near my orders, I would just step on the gas with any contracts I had left. People would see that flurry of activity. They would jump on. I would get filled. And then the other game I would play, spoofing was legal back then. As it's moving down, then I would load the order book with 1,000 lots to make people like afraid, like, oh, look, someone wants to sell. I don't want to, 1,000 lot. This is what spoofing is, guys. That's what's going on. It's still going on. It's supposed to be illegal, but it's still going on. But I would put offers in to force it into my bids because I'm already short, remember. Once I get filled, I would just yank my offers. So it's like a vacuum. And then everyone else is left to hold the bag, right? So I was not very, very liked. See, I bitch about it all day nowadays, now that I'm not a big trader. But this is all I used to do to traders all day long, right? I would play my games with the market, and that's what they're doing to you with these algos. So that's what I take great pleasure of showing you guys the games. If you can't beat them, join them. If you know what they're doing, right? How many traders that don't have Bookmap, they have no idea that this is down here, right? I will promise you, anyone wants to bet a round of golf in Scottsdale, and that will cost you because it's not cheap right now. I will bet you right now, send me an email if you want the bet. You got to do it here soon. That this will get tagged. Doesn't mean it's going to tag it right now. I will bet you by the end of the day this stuff gets tagged. It's probably going to happen within the next hour, but I don't know. It doesn't mean it has to happen right now. These guys will get their fills. So if you want to bet a round of golf, bring it. All right, so it's just nothing's happening now. Again, I'm still long one of bark and lick here. I did get out of one up here. I do have to put my stop on. I never put that in, so my stop's all the way down here at 327.50. I'm talking. Okay, as I got questions thrown in, I got to take a breath. Brent will be coming on here in a couple minutes, actually. No more talking. Put these in before he hops on. Brent from SpotGamma. He's got to do like 8 things to get on today for some reason. I got to So hopefully he can figure it out. I was having trouble figuring it out myself. So, all right. I'm going to get this stuff up too so I can ask him my questions. All right. Thank you, Dan. I saw your message. Dan from Bookmap. How long should the liquidity be in the order book to consider it from being Algo versus Algo games? Those aren't the Algo games. That's real money that wants to get filled, right? What is that noise I keep hearing? Like I'm blown out of an account. Oh, crap. I had hot knife through butter on and Russell. I forgot about this. I put this on this morning. Let me guess. It came all the way back. No, I'm still in this. We got a couple of these. This is a nice trade here. Still got some hot knife through butter. So these are my trades so far today. Right, in my Apex account. So I assign each Apex account a different strategy. So these were hot knife through butter. I'll go through these. The print is not on here quick enough. But that's still full size. That's a nice little puppy trade there. And then you got that one. And then these were earlier a trade bark and lick, but I got out with a hot knife through butter exit. I'll go over this and I got long. And then these are, I lost on those earlier ones in NQ. I showed you that, the hot knife through butter. I got out of those. And then I'm long right now with those one guys. And then I tried, this was the floby that I put on in the webinar. Hold on, I'm going to get out of half of these, Russell. Hot knife through butter. I should have got out of the same area I got out of my bark and lick. I just forgot I had the thing on. It's not very good trading, but guys, this is why I'm using the Apex because the other day I made a mistake and I was on a webinar, a different webinar, not mine, but a different one. And I left an order in the order book and I was supposed to be trading micros. I had the big E-mini contract on. Didn't even mean to do that. Didn't know I had the contract on because I was out of my office when I got filled. And I blew out I lost $6,000 of real money that I was live on an Apex account, a live PA account. That was very upsetting. Very, very upsetting. I'm still not over it. I wake up in cold sweats each night. I don't like throwing away $6,000, and I did it. So the point is, I make mistakes all the time, especially because I'm on these webinars and I forget I got stuff on. I'm just going to get out of this because I can't monitor this stuff. What am I doing here? So I'm using these. Let me get out of it. Trying to get out of the NASDAQ hot knife through butter. I think I just heard Brent. Down. There we go. That was very complicated for some reason. I don't know if Brent's on or what. Let's see here. Some emails.
Hey, Scott. I don't know if you can hear me. Hello?
Again, there's like 18 steps he's got to go through today for some reason. All right, I don't see him yet. So, Dan, if you see him come in, let me know. All right, what are we doing? So the markets are just doing nothing right now. So it's actually a great time for him to come on so I can ask some questions, but it's just whipsaw city. Guys, this is 85% of the trade is this type of trade, right? When nothing's going on, meaning big money playing, that's when the algos can see what we can see, right? Then you see this liquidity in here, and this is just a bunch of games. So, he's in StreamYard, just needs to join the Discord room.
Hey, Scott.
Can you hear me?
Yeah, I got you.
All right, I don't know which I got him.
Yeah, your guess is as good as mine. Today, there's like 12 steps for you to join the webinar.
All right.
So sorry about that.
You can hear me now?
Yeah.
Sounds like there's an echo.
There was. I don't hear it now, though. So I think you're good. Good to go.
Sorry, let me figure out how to do this.
Good luck. Dan, if you're on here, help him if he's if you can connect with him. What are you trying to do there, bro? I see you. I can hear you.
I just hear the echo. I think that maybe helps.
Yeah, I don't hear an echo, so.
I hear myself talk, but I love to hear myself talk, so that's okay.
My camera's messed up here. All right, you good to go?
What's happening today?
Not much. Watching choppiness right now. So I'm about to take some longs here in ES, and I got to make sure I put these in. 1 second here.
Yeah, I would say the market to me, I love this type of market, and I think maybe this is the difference between an options trader and a futures trader a little bit.
Yeah.
Express ideas a little differently sometimes. But the price actions made a lot of sense to me in that we have this negative gamma environment, and then we get this rush of short dated options flow that just seems to jam the market, 1 to 2%. And then obviously those moves will reverse quite sharply. I would also say over the last couple of days, we've had these big condor trades, which have been just fantastic price targets, really every day this week. And so on the option side of things, there's a lot of great ways to kind of express those trades at pretty reasonable prices. I think on the future side, it's a little trickier because obviously, you'll be long, markets up 1%, you're feeling great, and then literally in the course of about 60 seconds,
Well, yeah,
like an 80 handle reversal.
Well, yeah. I mean, it doesn't help that there's the Trump tariff talks every 5 minutes. Which what I don't understand is it's the same news every single time.
Yeah.
There's nothing new, and the markets react to it like it's a brand new statement. It's unbelievable. It's been very, very difficult. Again, I joke. I don't joke. It's been painful, but I think 18 out of the last 19 statements or tariff moves have been against my positions. Right. So it's like it's just the nature of trading. I understand that, but you got to deal with it. But it's been absolutely ridiculous, and the ATRs in these markets, the Nasdaq's had between a 50 and a 70 ATR consistently for the last week, right? So it's been very volatile. You never know when the statement's going to come out. Then it's either him or it's the girl from Mexico, the president there, or it's Trudeau. It's like every 5 seconds, it's like something else is coming out. So you add that in, it's been very difficult, right?
Yeah, I think, the feeling I get from a lot of traders when I'm looking around is that everybody's trying to pick like the bottom. Right, like I need to get in this thing, and I think a lot of people here probably have slightly shorter dated time frame. But the thing seems to be that people more want to catch like this epic move from this general area upward to 6,000 in the S&P, right? And this environment is unlikely to stay stable until there is a material, concrete resolution to particularly the tariff ideas. And I realize a lot of people are probably saying, well, no duh, Brent, on that statement. But when you look at the options volatility prices, so like you look at the VIX, even though you're getting these big swings in the market, the VIX is not changing prices at all. And the VIX is looking at 30-day options, so it's looking 30 days out in time. And so once the market says, okay, this is legit this time, I believe that this tariff issue is settled, then you'll see the VIX actually start to break, say, below 20. And then to me, that's the sign that, okay, this is going to be like a multi-day kind of stable rally.
Right.
And I think until you have that, you have to operate off this assumption that all of these moves are transient, meaning, yes, we could rally 100 handles and then give that right back, or we'll drop 100 handles and then rally it back up. And so I just think that, to your point, it's like there's this big chop, this big swings, and until that volatility clears, until VIX comes down, then you should assume that all rallies are subject to quick reversals.
Right.
And again, the value in that is, if you think about the VIX measures SPX options prices, particularly SPX puts. And so if you think about all the hedge funds in the world, all the traders in the world, it's a voting mechanism to say, okay, the VIX is dropping, which means that a month from now, we think that this issue is resolved, right? We're pricing in lower volatility in the future, which to me is simply a statement that, hey, this tariff thing is probably clear. We understand the rates are likely to stay stable or come down, or whatever the risk on metric is. Let the market tell you that it's resolved. And until then, the headlines are going to be kind of painful, and things are going to be, there'll be a lot of quick moves. And I think there's a lot to be made on those quick moves. I just think you have to take those gains more quickly than you would in a normal environment.
Right. Absolutely. Yeah. I mean,
so as things stand right now, we have this trace map, and the trace map shows us how much negative gamma there is in the market. So that chart right there.
well, yeah, I want to get into that. Let's look at the real time just so you can maybe go over.
Yeah, I wanted to show how this has been helpful in a couple of days here. It's kind of funny because I usually think in a market environment like this, so you're like, we expect high volatility. And a lot of people are like, yeah, well, that's not a shocking statement.
Right.
But watching people chat in our Discord or just on Twitter and stuff is like, no, I think we're going to pin this level or whatever. And when you look at that stability metric in the top right, that's at 7%. That tells us that we are set up for a big move today. And statistically, what that means is you should expect something like a 40 handle move within the next hour is roughly what that is. I'm sorry, 40 to 50 basis points, not handles.
So what's a basis point in ES? I know this is pretty pathetic. I've been trading for 25 years. What's a basis point in ES? A tick?
Well, 100 basis points is 1% of the SPX. So SPX trading, let's just call it 6,000. So 60 handle move would be 100 bips. So you're talking somewhere in the order of 40 to 50 handles.
Okay,
is what that sounds.
Okay.
Sorry, 40 basis points to 50 basis points of the current price move is closer to 30 handles.
Okay.
0.5%.
Got it.
So right now if you zoom out on that heat map a little bit there, Scott, top right, just switch to your left. Other way, please. Thank you. So you can see at 5,900, there's this really big position. This is this iron condor trade I keep talking about.
So what I don't mean to interrupt you, but what does it mean that it's already coming off here? Is that significant?
So what you're seeing there is this is interesting. That's measuring gamma, that chart. Gamma is highest for at the money options, and it increases as you get closer to expiration. So the reason that looks like it's coming off is because of the fact that strike is 100 handles away right now, right? So it's not that the traders closed the position, it's that the gamma of the position is decaying.
Okay.
Now what's interesting to me about this is that is 100 handles away. That is no joke. So this is pretty extended on the day. But what we've been seeing is that map is essentially neutral all the way up to 5,900. And the reason I say it is because on the right side of your chart, there are those red and blue zones that meet. Yeah, right there, and the other one below that. So the market on Wednesday, you remember that giant 80 handle drop, right at the close?
Right.
That 80 handle dropped right to the put side or the downside area of that condor strike.
That was this move here you're talking about right here.
Yep. Exactly. And I'm not going to sit here and say that I knew the market was going to drop 80 handles.
Well, yeah, that's my question too.
Level.
That was this hero move as well.
Exactly.
But yeah, I want to get into that. But go ahead. Sorry.
Yeah, but what I will say is once the market showed its hand that it was heading south, I immediately started to think condor strike. Right, that's the target. Makes sense. It's like show me your hand, and then I'll just set up the target.
Right. So it's like what I talk about in my terms, or what I look at with the liquidity in the order book. It's like a magnet. So you're saying this is like a magnet. That's like a magnet, or
right.
and the bumpers, right?
Exactly. Bumpers. Another great way. And so yesterday, that condor, the top side of that condor strike was 58.45. We ripped right to that level and pinned the entire afternoon. So the last 2 days, we've had this condor in the market. The trader has taken a partial loss the last 2 days. And the way that this works is when they lose money, they increase their size the next day. So those of you who gamble know this is called martingale betting strategy.
That always works
So
out. Take it from me.
It always works out. So this guy's at now 19,000 S&P 500 contracts. That's pretty big. That's big. You know, I think this is a retail person, like a professional, you know, pro-tail type person. But this is a really big trade right now.
So how do you know it's 19,000 contracts? Where do you
So if
see
you
that?
hit on the top left, gex there, right above your cursor.
This?
One more left. Flip that to net OI. There's net open interest, and if you hover over those big strikes right there, you'll see the contract size.
Okay.
So that's a full size of 21,000. The smallest of those legs is 19. So if you look over the top left, right to your left, there's the other side of that trade. See the other big orange bar? Yeah, so it's 17.
So that's 17,000 futures, or is that calls?
S&P index calls.
Calls. So what's the equivalent in the futures, though?
Well, this is not a giant position in terms of its future size, because that spread is only 5 handles wide.
Okay.
But what you start to get to is, if this guy is wrong today, he's going to lose $6 million. So there are people that are hedging that order, right? Market makers on the other side of that, and they potentially will make $6 million, right? If you trade that spread.
Right.
So as a barometer through the course of the day, you go, okay, does this matter? Maybe not. You know, like how much impact will this have on the market? On an average daily basis, you go, okay, probably not that big of a deal. But when you start to get to being worth, say, $6 million, and all I got to do is move the market, you know, up or down a few handles in order to get this to unlock, you know, $6 million of P&L, then you can imagine how people's incentives start to change.
Right. Well, so that's a question that I want to get into, because the newest game in town. So, you know, I've been trading for 25 years, and, you know, back in my day when I was a large scalper, it was always right around 10:30 a.m. Between 10:30 and 12:30, I've lost millions and millions of dollars, because it's like that's when the games start being played. Back then, it was a couple big traders that would just start pushing the market around, because that's when like New York goes to launch and Chicago goes to launch, and like the big funds and things are like out of the market at that time period. So, I mean, they're in sometimes, but the majority of times there's no one there. So that's when the games are starting to be played. So the newest game that I'm seeing is with the hero. And it always seems to be up too, right? So it's like we hit 10:30, all of a sudden the hero starts to rip like $1 billion, $2 billion, and then so that's the game I'm asking you about. One, I know they're doing it because I'm watching the hero, but I've even talked about this. Like back in the day when I was a scalper, I could put on up to 3,000 E-mini S&P contracts, right? So my question is, like, you know, are they putting on more contracts of loading up these options dealers because options dealers have to hedge themselves, right? So they know they're going to get a reaction from these options dealers buying futures. Is that in your mind? Is that what's going on as far as the hero manipulation? They're just, like you said, all they got to do is push the market a little bit and get it going in their direction. Do you think they are manipulating these?
So if you flip the map to the delta map, so next to stability is this. You can drop that down. You make this pretty simple to understand. In the whites to blue zone, the dealers, we believe, have to buy futures in those white to blue zones. That's a very light blue zone.
Where's blue? I'm colorblind, so that's
sorry, purple. So
down
you
here?
can see red.
I could see this red.
Okay. So absence of red
is,
you know, and this is actually like a white. So this is very light. So you're
right.
They say you're colorblind. Well, everyone else sees it as mainly white right now. It's like not a dark blue.
Right.
The reason I bring up this chart is because when you see a dark purple or blue on this map, it infers that dealers have a lot of stock to buy. And so you said yesterday, you know, you see hero start to really ramp. And what we're seeing is the existing position for dealers is they have to buy as the market goes higher, and they have to sell as the market goes lower. So they're sitting there with that position on. And then what we see is people come out and they start buying tons of calls and selling tons of puts. And what that happens is that makes dealers have to start buying incremental futures
To hedge themselves. Right.
to hedge themselves. And that's happening in this environment where they have to buy if the market was going to start going higher anyways. So you get kind of this double whammy where they're essentially just this forced buyer, you know, that has to keep buying into higher prices. And then with this type of buying, like once you're done buying, it's not like you have a more behind it or something like that, right? Like you kind of are the market. And so when you're done buying, well, there's no support there anymore, right? We just kind of reverse. So like on Friday, we had this unbelievable ramp higher. It was the last 20 minutes we went up like 1%, right? And then Monday we give it all back. Wednesday we did the same thing. Last night we rallied to 58.50, and then overnight magically back down. It's because most of the flow, in my view, is short dated, ton of hedging flow. It's not like this real buyer. It's not like the world's biggest hedge fund in the world just put their flag in the ground saying this is a structural low and I'm going to be buying the dip here in perpetuity, right? It's like chasing flow that dries up when the move is over.
Right, but is there a way, like when the hero starts to rip, is there a way to judge with this coloring whether these dealers you're going to get 40, 50 point moves? Like
that's what you look at this map right now and you go, Brian, what is the resistance based on this map? There's no resistance right now until 5,900, and that's where that giant condor spread is, and then you can see the map is red above that level.
And that means what?
That means that if we start seeing the hero indicator spiking, and you start getting that $3, $4, $5 billion, there's really no reason to think the rally will stop up until that level.
And what if it was blue? So what if it was blue up here?
If that was blue up there, then that infers that they have more buying to do, right? Blue indicates buying and red indicates selling. So in this case, what you have is a very mild amount of bluing at the moment above, kind of just like really just an air pocket. If that map was dark blue, which sometimes they can get dark blue, then that's telling you that the dealers have a lot of buying into higher prices. Right now, they have very mild buying into prices, almost kind of new. And that's why.
So what you're saying is, so that's why if we get these ridiculous rallies, it'll turn around and do that because the dealers aren't really confirming.
And the map changes colors every 10 minutes, right? The color shades change.
Right.
And so a lot of times what you see is that the dealer buying will die up over the course of the day. And why is that? It's because people, if they own calls, they sell them. If they sell puts, they close those positions up, right? The positions change and that changes the map.
What's the best way to look at that? The delta pressure or the gamma pressure?
Like what's generally, I'll toggle between both, but the easiest thing I think for futures traders to understand is the delta pressure map, because it just tells you, are dealers and market makers selling at these various price levels, or are they buying at these various price levels?
So you said the delta is the better one?
I think that's kind of the easier map to sort of understand. And you can pull other information from the other map. But this is the simplest thing, right?
Right.
If you start to see that map get darker blue, kind of where the S&P is currently trading, that's a great sign that the pressure, the water's going from like a simmer to a boil.
Okay.
Meaning the buying pressure.
All right. Let me I just got to ask you some of these questions because it's been driving me crazy. One, well, let's go through these examples first quickly, and then I want to just see if you can point out anything on the tape, the new tape indicator that would kind of precede a big. Now I'm getting the echo. Precede a big hero move.
Yeah, there was the big rally on Wednesday was really interesting because the S&P had made a low 11:30 in the morning. And then someone came out and sold about $300 million worth of NVIDIA puts. And that caused the market, like that was the low of the market. That was the kind of like the bad signal that market was about to rally. And so a lot of the options that trade now are in these tech names, right? And these Tesla, NVIDIA, et cetera. And so there's a lot of great signal in, you mentioned tape, where you see these big trades going off.
Right.
And I would just say, as a general game plan today, right? I'm watching these condor strikes. The one is up to 5,900. The second position is down at 5,775. So right now I'm figuring on looking for mean reversion into that 5,770 area. Were to sell off sharply below that, I would bet on a move up, and vice versa. If we do start to rally, I'm to be looking for an opportunity to think that it drifts back to that 57.75.
Right. So, but this is where the stuff that I'm watching, with the CME MBO data with these icebergs can tell you too. So it's like knowing that, we're at your big levels here, or the big levels that you have. And then there's been nothing but huge sell ice here. So it has moved a little higher. Actually, I went long on this. I'm going to stop out right here, guys, by the way, that we were talking about the hot and three butter. I'm not going to wait all the way down here. My point being is, when you're looking at the option stuff and the Captain Condor in that big area, and then you see a bunch of sell ice coming in here, that can help you, gauge, okay, this is, big money's in here selling too. And, that's the magnet that just can help you with a bigger view thesis wise, like, okay, yeah, we have a much better chance of heading down here because someone in here is selling huge as well. That not necessarily is not necessarily related to the options either, right? So that's what I always try to, and we talked about this before too. Yeah, the options dealers are big players, and that's your main thesis of watching that stuff. But they're not the only player in here, right? So this doesn't mean this has to be options activity. But when you put them together, right? When the big money selling in here, and that huge Captain Condor level is down there, now you got yourself a legitimate thesis of why this thing may break hard down to that level, right?
That's exactly right, and I think that most people go, well, 5,800 is a round number, right, in the S&P, so I would expect stuff to transact there, options or not. And I go, well, okay, that's fair. But there's no other level in the market at 57.75 SPX, besides this big options position, to my knowledge, right? So, that to me says, okay, that is the driver at that level, and it's hard to argue something different. Right.
Now, let me ask you this stuff real quick. It's been driving me crazy. So lately, I've been seeing this more and more, and I've never seen this before, where it's all of these flow, and the thing's going off nonstop. Why is it different now? Like before, we would see like maybe one or two. Now, like, did you guys change something in this, or why are we seeing so many of them?
No, we've been looking at that, and what it seems like is just a function of how the market's been acting, and essentially what we're getting is flickering of the data around these points. So you can see how the flow alerts are going off the oscillation, like there's like that wave pattern. Right. That wave pattern is just really different and kind of strange.
How would you read that though, right? Because you always talk about, and we actually have a trade called the floby, like the haircutting thing. I named it the floby, where the market's moving down, you get your flow alert, and you say once the hero levels off, the market tends to react the other way. So we have actually a trade for that, trade setup. But how are you reading something like this, where it's not really it's oscillating like you said? What would be your guess?
What it's telling you is that there's just really big flow, back and forth. It's the chop that you were talking about before. And so, it's admittedly kind of degrading that signal in some ways, because normally you would look at that and say, okay, there's a significant wave flow set up a trade off that, like we just mentioned with Floby, right?
Right.
But in this case, not all that like the futures market, it's just this chop, because I mentioned before, you're getting massive, essentially zero DTE flows is what the predominant flow in the market is, during these last couple of weeks. The longer dated people don't want to stick their neck out because they don't know what's going to happen, tariff, whatever else going on the macro side of things. And so the only other player that's in the game right now are these short dated momentum guys, and that flow, I think, is causing this type of strange alert.
So when go ahead, I'm sorry.
I would just say I don't like, that's not useful to me when you're getting this flickering. And so I don't think that is a desired, functionality. Have a hedge fund after the dispersion that is going through the hero data and rebuilding alerts, because, I think these could be a lot more valuable.
Could you expect, when you see something like this, would it be more of a propensity for the market to have bigger moves because there is so much activity? I'm saying, like going forward, not that you're going to guess the direction, but when it does move a certain direction, can you expect a bigger move, or do you think that has no bearing?
The thing that I've noticed about it is that seems to be happening at these like price transition levels. So it's like a digestion area in the market. Kind of like in the futures prices where you see in Bookmap, you get those big, price bubbles or liquidity zones, right?
Right.
So it's like, that's kind of how I've been reading those. And I've been discounting a little bit because there's a lot of no specific signal, and really focusing on that delta map and then watching for that hero flow to push direction with a price target at these condors. Well, all these condors very effective for the last 1 to 2 weeks.
Right. Just want to see what this hero flow looks like right now. So guys, I'm out of my ES longs. I gave it a shot, and this is the pattern where if it tries multiple ATRs above here, which it did, right? We went long, ATR retest confirm. I went long again to the tick as usual, and it can't go. It's telling you something. If it keeps tagging the ATR above these volume events, it can't go. I'm jumping out. I just jumped out right there to the tick too, but I'm out. And especially listening to Brent, like it looks like this is where this is heading. And you have the benefit of knowing, granted for my patterns, this I can't go short off of this event per se, but bigger picture, this looks like this may be coming down here now because the sell ice and the propensity for these markets to head to these big gamma levels with, in this case, the Captain Condor guy. So the other question, we got a couple minutes left here. I just want to ask you. Oh, so the main thing is the tape, right? So first of all, guys, before I forget, this is on my website now. So if you use the code Scott, you get 50% off your first month.
I can see your screen. I don't know if I'm the only one. This you pause, you minimize your application.
You can't see it? I could see it on YouTube. That's weird. Maybe
I'm
just on
Discord.
Discord. No. But anyway, this use coupon code Sky, you get 50% off. I'm not sure.
Yeah, if you go to so at SpotGamma.com, you get 50% off the code Scott. So that's it's a great time to try this stuff out. I would say just because there's so much volatility, so much information in that options data.
Right. And then lastly, is there, and this is probably a whole nother webinar, but is there a way, because this is your newest indicator, is there a way to kind of dictate or guess, like for lack of a better word, when the hero is actually going to turn? Like, is there some kind of volume I should be looking for? I know we get the hero alerts, but is there kind of an edge in this where I can maybe say, okay, hero is about to turn or it's about to rip?
There's a couple of things I like to look at in here. If you go to the top right of this, we'll start with the easiest to understand. So top right of this page, open that up, the largest trade. So a little bit below, there's a see more.
Yeah.
There you go. So when you look at this, you'll start to note when you watch it on a daily basis, like what the big trades are. Like NVIDIA and Tesla are always going to be some of the biggest trades, but then you'll start to pick up on other themes. Are people buying? Are they trading puts and calls? Gold, MicroStrategy, Tesla, Baba, Apple, etc. And so that to me starts to get interesting. Well, are people starting to position for some longer dated trades? And you can see the expiration of those is June and April and some things like that. And so you can start to pull some information off of the themes that are in there, and the different sectors and the different stocks. If you see people buying or just huge call positions coming up in top tech names, that's oftentimes a pretty bullish signal, given that these stocks are all at low. The other thing that you can do, which I think is really valuable, if you go to Hero, when you see big jumps, like go to S&P equities, you can zoom in on this chart, and when you see kind of big jumps in here, the flow data at the bottom under that screen. So like what just happened there, for example, 30, right? Big at market jump. When you zoomed in, the flow data below in that box below is zooming into the contracts that traded in that same time.
Got it.
So you can click on contracts data, which is to your left, next to flow data. There you go. And this gives you the summary of what traded in that same window. So it takes all the individual prints and summarizes them. So you can go, what just happened? And if it looks like Hero jumped, and you see like that NVIDIA call position is the largest position that's traded, somebody just bought a bunch of NVIDIA calls, right? And you can see the premium at 30.3 million or $30 million in premium, 12 million premium. So you can start to be like, oh, they're buying calls in big tech, right? Because Hero's going up and the biggest trades are calls. What's called? Does that make sense?
Yeah.
So that way this gives you the overview of saying, okay, I know what just jumped the market there because this giant options order just, right? And if it's an Apple, Tesla, NVIDIA order and it's, 30, 40, 50, $100 million in premium, Then I go, okay, I know what that was. Weird news headlines like somebody just bought or sold a bunch of options.
Right.
And if it's mega tech, that means something. If it's gold or Lockheed Martin or something, maybe it means something else. But
Right.
you really get that view of the other information. And like I said, that giant NVIDIA put sale the other day was this like, oh, excuse the French, but oh shit moment that like, all right, that's one of those signals, right? We all know that there's guys diamond trade, right, where he bought it was like $50 million of JP Morgan stock, which crash that was, and that was the low of the market. And so sometimes you see these giant hedge fund orders that hit the market, the options market, and it's like, okay, this is a risk on, trade that we all need to be aware of.
By the way, that was that ridiculous move there. Here we go again. We're right here. So it's like, again, it's like it's just impossible. You just got to hope you're not on the wrong side of the trade, right? So right there, no tariffs for Mexico, and then so we were breaking, and then the market just turned around and ripped right back. So it's like it's just very difficult, guys. So I mean, you got to make a decision whether you're just going to sit this out. So this was this thing looked like it was going straight to the Captain Condor when it broke this zone, and then that came out, and then the thing rips 25 points. So again, there's no way you can predict unless you're sitting next to Trump and he tells you when he's going to talk. You just got to hope you're not on the wrong side of this. That's why you got to have your stops and then just. But once again, just whipsaw ridiculousness. So
do you by chance trade the Bitcoin at all?
I don't. I did a while ago, but I don't trade it. But yeah, you get the, so for instance, it wasn't Bitcoin today, but it was ETH. You're getting these MBO icebergs and stuff, and these futures just like you do here. So you could trade the cash off of this information, like I trade the future ES and stuff. But yeah, I don't take it.
I was curious what you thought about it, because there seems to be a lot of bullish call data showing up, and with this kind of administration in this market, it's kind of like you feel like the information we get at something big is about to happens.
Right. Well, yeah. Well, Friday they're supposed to announce the reserve thing too. Yeah, they're supposed to announce that reserve, the crypto reserve.
They said they were, and there was a huge pump and dump over the weekend. I guess last weekend on.
Yeah, that's not surprising.
The crypto prices gave way, but there's something. It feels like there's something sneaky going on there.
Yeah.
And I don't know anything, but when the options calls start getting bid like they are, like in MicroStrategy stuff, you start going like, what's going on here?
Right. All right. So sorry, this is pretty short, but I only have till we're actually 6 minutes over because I got another educator coming up.
Appreciate the opportunity to come talk to you.
Yeah, thanks for coming in, guys. You can get that. Use code Scott. You get half price off the first month. And again, this is really important information, more so than the old days, where now you get these moves with the next expiration, the 0 date to expiration. That stuff's running the show many of the days. So this stuff is very, very important to know what's going on. And then this stuff is invaluable for me in my room. Like, listen to this. Like, when my thesis based on structure stuff matches your options thesis, it's like golden. And then I always tell them, like, when you use certain terminology, usually you're right, probably 99% of the time of the move. So very, very incredible stuff that you're putting out.
Well, thanks, Scott. It's very flattering, especially coming from somebody of your calibers.
Thanks,
I really appreciate that. And hope to see a bunch of y'all in the SpotGamma community soon. We actually had a Q&A come out to PM, so if you join up to this morning, you get a link to that, and we'll be talking shop.
Awesome. I will be on there. Thanks, Brian. Appreciate it.
Thanks so much. See y'all soon.
Thanks.
Good luck.
Thanks. Bye.